Houston, and welcome to On the Money with Ryan Wheless. Also joining us today is the Executive Director of Financial Planners, Peter Lott. Sitting here.
I love that intro, man. I love it. Every time you do it, I love it.
Gave him that title.
This guy did. My good buddy Spike on the radio show that we do. My good buddy Spike gave me that title.
All right, I will give you proper due. The founder of Allied Wealth, Ryan Wheless. So glad to be with you. So glad to be with you guys. This is what you've called a very special program. We're going to be doing something a little bit different today. As a reminder to everyone out there, of course, the team here at Allied Wealth always does retirement planning for viewers like you, taking a look at everything from your investment strategy, taxes, Social Security, legacy planning. But today we're going to spend a specific focus on insurance and insurance needs. Let me kick it off starting right away with this book that I'm looking at right in front of me.
Yes, Mike. So this book is written by a dear friend of mine named Mark Loffenberger. And Mark is who I consider to be the godfather of insurance. And the guy's likely forgotten more about insurance than many will ever know. And Mark wrote this book. He gave me a bunch of copies, and we're going to give this book away today on the show. And it's really important. It's one of these things, like a while back we did an annuity show. It's one of these things where there's a lot of naysayers out there about life insurance, that sort of thing. And we're really trying to make sure that folks at home are properly educated and forget what the naysayers say. Get educated on your own and make the decision for yourselves. And that's what we're here to do today.
Okay, all right. So, yeah, that's part of it. There's so many different obstacles. I wonder if I need that much more insurance as I'm getting ready for retirement, because the book is called The Retirement Hero. I think of life insurance needs for when I'm living, when I have a family, for protecting salary needs and so forth, if I'm no longer around, if a spouse is no longer around. You're saying there are different tools, though, to using these insurance instruments.
No question about it. So, and Spike, obviously, I'm a big fan of being properly insured. And folks at home, if you're hearing me right now and you don't have life insurance to protect your family, like a basic term life insurance policy, please get something. Because I can assure you, if that day comes and you could see from the other side of the grave, standing there with the Grim Reaper, and what your family will go through without some type of protection, I can tell you right now, you would not want to see that. You want to absolutely be covered and protected in some capacity. So please get that. And that's what people think life insurance is usually.
Right.
Is,
protection of my family or my estate, or maybe a little bit of legacy planning.
But this is different, all right? So there's a couple problems we have in the world. And the biggest problem that we have is we are hooked on something called tax deferral. So we are taught to fund a 401k with money that's never been taxed. So when the money goes in the 401k, it's not taxed. We get our company match, right? And we just truck on down the road and we kick the can of paying taxes on those dollars down the road to a later point in time in life. Well, that can be a very, very big problem. And the reason why I say that is our country today is $30 trillion in debt. Big time debt.
By the time we go to commercial, probably 31.
You're about right. Go look at usdebtclock.org and you'll see it for yourself. And so the thing about it is okay, we're deferring taxes today when tax rates are historic lows, only to pay them later, 20, 30 years in the future, when we were retired and we have no tax deductions, right?
Yeah.
So it's one of these things, like, does that make the most sense? And then you have to look at it as, okay, Ryan, I understand that, but how do I get tax-free income? Well, one of the ways you can get tax-free income is a Roth IRA. But guess what? If you make too much money, you can't put money in a Roth
What
IRA.
are those thresholds again? If you don't mind, just ballpark.
Was $114,000 for,
Okay.
$144,000 if you're single, $208,000 if you're a married couple. And a married couple in Houston, doing well.
A lot of folks, a lot of folks.
Take long
there's
to
a
go,
big population of that. Yeah,
all right, so you can't start in a Roth. Let's say you're in your 40s, your 50s, these large earning years. You're making well over $200,000 a year. Very common here in Houston. You can't use a Roth to start. So you're in those tax protected accounts. It's like you're kind of handcuffed from the start.
That's exactly right. So you retire with all these dollars in these tax infested accounts. So the question is there a better way? Well, there is, and that's what the book is all about, all right? And so the better way is something called a Section 7702 plan, all right? And Section 7702 was called by Ed Slott, who was America's IRA expert, is the greatest gift remaining in the tax code. All right, and the Section 7702 code in the IRS has to do with how life insurance is taxed. Well, what people don't know about life insurance is this. You have the ability to overfund a life insurance policy, put more money in than you need to for a small death benefit, because inside the policy, that money will grow tax deferred, all right, or tax free for the life of the policy. And you build up a big cash value of a big treasure chest of cash value. All that cash value 10, 15 years down the road when you retire can be pulled out 100% tax free.
Ryan, what kind of investments is it invested into, though?
Yeah, so as far as investments go, we use an index in these programs. They're called Index Universal Life Insurance programs, and they're much like a fixed index annuity.
Yeah.
But the difference is the caps are much higher on your returns. So the caps in these policies are anywhere from 10 to 15%. So if the stock market goes up 10 or 15%, you get 10 or 15%. And if the stock market goes down 20%, you don't lose any money whatsoever. That's pretty cool.
I'm sorry, what I'm still trying to wrap my head around is you're still talking about insurance.
I'm talking about life insurance, and that's why it's so important that folks take advantage of the book, because we don't know this stuff. It's one of these things where when it comes to retirement planning, we don't know what we don't know, and that is just the foundation of what we do at Allied Wealth, is to bring this stuff to light so people can make informed decisions on their own.
Right, right. So when we start using these, when is a good time frame? Are we looking at our 40s or 50s to transition? Should we move? You talked before about at least having term.
Spike, it's a good time just about any time. You know, you can do these when you're in retirement. You can do them before retirement. You can do these for your kids for college planning. You can do this for grant. You can do this for a lot of different time frames in your life. It's not just one time frame fits it. It kind of fits wherever you want it to go into. There's a ton of benefits you can
All
use
right,
for this.
so for the viewers out there right now, we do have this book here. We want to get this information in everybody's hands. What are you doing with that?
Yeah, so folks, all you have to do is call the number you see on the screen. It's 844-944-7555. Again, 844-944-7555. Give us a call. When you call us, we're going to ask you to schedule a 15-minute strategy session just to try to figure out what you're trying to accomplish. And then after that, we're going to send you this book, Compliments on Us, including the postage, by the way. I'll even pay for the postage to get it to you, okay? And again, all you have to do is get the book is 844-944-7555. Again, 844-944-7555. If tax-free income coming to your mailbox in your golden years is something of interest to you, I promise you this book is for you. It's Compliments of Us. Again, I'll send it to you. I'll pay the postage. Call us, 844-944-7555. Click the QR code on the screen, or also check us out at onthemoneytv.com.
You know, it's always hard for me to get you guys to stop talking, but we got to take a quick commercial break. I do the radio show with
hot air.
We like to goof around here, folks, but your retirement is really important. So please call to get this complimentary book from the fellows. Also, you can ask for your financial flight plan. It's going to give you the tools that you need, the knowledge that you need, and the comfort that you need to know that you'll be able to be and stay retired. The best way to do that is call us right here. In fact, the first 25 callers will get their own complimentary financial flight plan. But you got to call us, 844-944-7555. More On the Money with Ryan and Peter when we get back right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Hello, Houston. Welcome back to On the Money with Ryan Wheless. He is the founder of Allied Wealth. I'm also here with Peter Lott, financial advisor in the office. We do the radio show together. Executive Director of Financial Planning. We're having some fun actually today with insurance. Tell me a little bit about the book again that's right here in front of us.
So the book is written, folks, for people that have curiosities about how to achieve tax-free income in their retirement. And there's a section in the Internal Revenue Code called Section 7702 that deals with how life insurance is taxed. And believe it or not, you can put a lot of money into a life insurance policy and have those dollars grow tax-free without risk whatsoever and build up a treasure chest of money. And you can draw that money out 100% tax-free in your golden years, and your dollars go much, much further. And Spike, another thing about this that people don't realize, there's living benefits to life insurance. You don't have to die anymore.
I was going to say, that was always my bummer when I was starting in my 20s and 30s. I'm like, oh, I'm going to pay so much into something that I'm never going to see.
Yeah, I mean, there's long-term care benefits attached to this stuff. So one of the biggest fears people have is running out of money, paying too much in taxes and long-term care. With this program, we can solve not all your issues, but certainly solve several of them. And it's so amazing to me the number of people who hear, somebody like Dave Ramsey go, oh, it's terrible, you shouldn't do that. You know what? Dave Ramsey may or not be right. Right? What you have to do is figure out how this stuff applies to you and if it's right for you. And that's what we're doing today by giving away this book. It's compliments of us. I'll even send it to you with postage. I'll cover the postage. So to get it, all you got to do is call us, 844-944-7555. Again, 844-944-7555.
Peter Lott, the Executive Director of Financial Planning, might even drive it to your house if you're close enough.
I've been known to show up, so be careful.
No, but let's talk about taxes. One of the levers you're trying to pull on this is tax savings. And like you've said, we've been kind of force-fed into tax-protected accounts because of 401ks.
Tax-infested accounts.
I like that word, tax-infested.
So how does this book and how do the solutions in here help us protect our taxes so we have more to spend later in life?
Well, one of the things you're going to face is when you retire, all right, down the road, tax rates are going to be higher. So let's spend a minute and talk about that.
Well, yeah.
Let's go back to World War II. Just after World War II, the highest tax rate was 94%. All right, and there was an actor turned politician back in those days. All right.
I know. Ronald Reagan.
He made 2 movies a year, right? He'd make 2 movies a year and go back to his ranch in California and ride horses. Who did he ride horses with?
John Wayne.
Jane Wildman. Jane Wildman was his first wife. A lot of people think it was Nancy, right? But it wasn't. It was Jane Wildman. So anyway,
I thought he was riding horses with his buddies. I
Well,
didn't know you were going down that avenue.
Anyway, so the bottom line is that tax rates, when the country had little to no debt, were as high as they've ever been. 94% was the upper tax rate, right? Upper tax bracket rate. So now we're in a situation where we're $30 trillion in debt. We've got Medicare strains. We've got Medicaid strains. Social Security is underfunded. We're not collecting enough tax revenue at the government levels, and we're having massive deficit spending, right? So the result is taxes have to go up. So if all of your money is in tax-infested accounts when you retire, and every dollar comes out to 100% taxable, you have nowhere to hide. So our thing is this. When you're contributing to that 401k, I want you to take advantage of the company match. It's 100% return on your money, Spike. You can't lose on that, right? Put it in the market, let it run, but don't do any more than that. Take the rest of the money and at least consider funding something like the book talks about in an indexed universal life policy that qualifies under Section 7702 of the Internal Revenue Code and allows you to take money out of it 100% tax-free.
Okay, I can tell that he's very excited about this. Maybe you can help our viewers here. Index Universal Life. Can you give me a little bit more of an explanation of it for folks out there? We hear all these acronyms.
Ron, you got to do it. You're doing great. You got to keep going with it, buddy. I love the excitement coming from you. I can't take this from you.
I'm passionate about it because I've done
well in life. That is great to see.
And I pay taxes, and I believe in paying my fair share of taxes. Our country needs money to come in the doors for roads and infrastructure and security and our armed forces. And I'm a big believer in the armed forces, folks, big time. But I also believe in paying my fair share, and I think that if we're stacking the deck by giving the government all the control to change the rules, raise our tax rates, potentially, I've heard nationalizing 401ks and IRAs, right? They can change the game on us at any time. Yeah. And so I feel like we should be in a position to where we can still maintain some control, and the hidden treasure of Section 7702 in the Internal Revenue Code is that answer.
Well, Ron, if you've got $1 million in an IRA, you really don't have $1 million in an IRA.
How much
right?
of that IRA is yours, Pete?
Well, how much is Uncle Sam's and how much is yours depends on how you take it out, but you don't have $1 million, and you have to plan for that. You have to do that with tax-free income, other tools that are like that, so you can do that. So in the fact that when we get to that point, when we need to start living on income, we're not having to pay a high tax bracket.
Well, if your income is tax-free, you need less dollars to achieve the same level of lifestyle than you do when you're paying taxes on every dollar.
Right.
And I'm not saying, folks, that I can get you to where you won't pay any taxes. That's not feasible. But I can put you in a situation to where your income is way, way, way more tax efficient, which allows you, by the way, to take less risk and potentially retire on less dollars.
Okay, but there is something I do think you can explain for us. You keep saying 7702. Can you explain the simple function of it and what that means?
Yeah, it simply means it has to do with how life insurance is taxed. All right, so the way you take money out of a life insurance is something called a policy loan. When you pull the money out of the insurance policy, it comes out as a loan to you. And so if you go out and buy a home and you get a mortgage, right, do you report the mortgage on your tax return?
No.
Yeah.
No. It's a tax. When you get the money, you don't, and not as income. Or you can tax deduct the interest, right? But you don't report the loan you got as income because loans are not taxable. It's the exact same way with a life insurance policy. And this loophole, by the way, could close at any time. All right.
Oh yeah.
And so if
they
you
change things like file and suspend all the time.
Sure. Like what happened to file and suspend with Social Security? It's gone, right? So the thing is that if you have this program in existence today, you're going to be grandfathered in. It's always going to be there for you. And I couldn't imagine missing out on this great opportunity to have a Section 7702 plan. All right. I couldn't imagine that, and then find out later on the loophole closes and you can't do it. You can't enjoy that tax-free income anymore. You're now enslaved to tax-infested retirement accounts, your golden years, and you have little to no control over your taxes.
Right. So we are going to give out complimentary copies of the book. They can just call the phone number that they see on the screen here. But as I said, this is a very special show, so we also have a very special segment that's coming up right here. I know that you're even more passionate about this. Tell me about this Mighty Oaks.
Spike. So I'm a God-fearing, family-loving, country-loving, gun-toting Texan. All right, and I will tell you right now that I am also, and Peter is too. We are the American dream story. And you can't be the American dream story without the greatest country in the world being America, right? And so we are the greatest country in the world because, in the land of opportunity, because of the great men and women who have fought and died for our country and the great men and women who continue to serve our country. But something's happening. These soldiers are coming back from overseas and war zones, and when they come back home, they're dealing with things that are called post-traumatic stress disorder, and they're stressed out, they don't know how to reacclimate, they don't know what's going on, and they get depressed and ultimately take their life. And we have 20 soldiers a day commit suicide right here on U.S. soil as a direct result of PTSD. And it's my mission and my company's mission to get that number to zero. So folks, we support to do that. We support an organization called the Mighty Oaks Warrior Programs, and I want you to check out this super important message from the Mighty Oaks Warrior Programs. We'll be right back.
Many of our veterans feel they need to fight their battles alone. This self-isolation has led to the staggering statistic of more than 20 veterans taking their lives every day. The mission of Mighty Oaks is to eradicate the veteran suicide epidemic and help our warriors change their legacies. We've been able to help over 4,000 veterans and first responders by equipping them with the tools they need to live the lives they were created to live. Our faith-based, peer-to-peer approach has one of the highest success rates of any program available today, offering hope and understanding to those who need it most. By aligning their lives to biblical principles, these men and women are able to lead their families, their communities, and our nation. It's your generosity that can make a difference in the lives of the men and women who have fought for our country and our freedoms. Now that they're home, don't let them fight alone. Learn more at mightyoaksprograms.org.
Welcome back to On the Money with the founder of Allied Wealth, Ryan Wheless, also the executive director of financial planning.
I love it, man. Every time. I love it.
I love doing it.
I love you, man. You always got all these great titles for you.
I'm your host, Spike Spangle. We're having a lot of fun. I do the radio show with the fellas, so it's great to be in television studio.
And Spike never stops talking in the radio voice, folks. It's all the
This
time.
is me all day long. My girl asked me that too. She's like, "Do you ever stop talking like that?" I'm like, "No, this is me all the time." but we're talking about insurance, and I'm really surprised. I have to admit, I'm surprised at some of the solutions that you're saying, especially with this 7702, kind of the different tax way that it comes out from it. Again, I really thought that life insurance was really just a benefit for someone else, whether it was me or someone else, when you pass away. But there's all these different tools to it that I was surprised about.
No question about it. So there's living benefits. You no longer have to die to get the benefits of a life insurance policy. There's living benefits like terminal illness riders. So if you're diagnosed with a terminal illness or with terminal, there are chronic illness riders. There are long-term care riders, and of course, there's the benefits of getting the tax-free income for life out of these programs.
Okay.
So they kind of took these programs and turned them on their side, and more so designed them to take advantage of the Section 7702 tax code. And it happens to be a life insurance policy that does it, but that doesn't matter, right? What matters is what are the benefits you get. Right? I can't imagine anything better out there than being able to put money in over a long period of time, folks. That's one negative to it. It's a long-term investment. It doesn't happen overnight, all right? You put money into this thing. It grows safely in a market index like the S&P 500. The market goes up anywhere from 10 to 15%. You get all 10 to 15%. The market goes down. You don't lose a dime. It grows tax-free. And then later on down the road, when you retire, you can pull income out of this thing for the rest of your life and have tax-free income. But wait a minute, there's one more thing. There's also typically a tax-free death benefit at around age 95 or 90 that your heirs pick up as well.
Yeah, Ryan, if I die today and my wife gets my 401k, my IRA, she just gets that balance.
Yeah, if
and
you got $200,000.
she's going to pay tax on it when she pulls the money out.
That's it.
This tool allows us to get the money tax-free to my beneficiaries in the event of my passing. So even if I passed away sooner than later, my wife's going to be more protected as opposed to getting a taxable account from the IRA.
Pete's making the guy. God, I love you, dude.
I mean, sometimes I come alive, and sometimes I'm sitting here like, is he going to say anything?
This is why you're. What are you again? The executive director.
Yeah.
Executive Director of Financial. Stay on track, guys. Stay on track.
But Pete's right, Spike. People fund a 401k with, I think the max this year $24,000 somewhere in that range.
Yeah,
I don't know the exact number. It's around $24,000. But they fund a 401k, $24,000 a year. Well, if they die early, say at 45 or 50, their family gets what? The balance of that 401k. That might be $200,000, $300,000, $400,000. If you're putting $22,000 a year into a life insurance policy and you die, your family's gonna get like $2 million, depending on your health and age and that sort of thing.
Tax-free.
Tax-free, right? So there's a lot of benefits to making this kind of a ledger, if you will, on side your 401k contributions. And again, max out your 401k up to the company match. Get all the free money. It's free, right? Nothing better in life than free money, okay? And then after you're done doing that, look at funding one of these strategies. So folks, the book is here to tell you all about this stuff. And to get the book, we tell you to give us a phone call, 844-944-7555. Again, 844-944-7555. 15-minute phone call to find out what you're trying to accomplish. What we're going to do is study the book. After you read the book, we're going to call you again, and we'll run some illustrations for you and show you how the stuff works and see if it's for you. And if it's for you, we'll talk about moving forward. And if it's not, you made an educated decision to pass on this great opportunity.
All right. Now, rubber meets the road.
Well, hang on.
All right.
It's an easy book to read. I read it in about an hour and 15 minutes, and I was sitting next to Ryan, and it took him about 3 hours to read it. So it's a quick.
That's because you're the executive director of financial
Somebody's got to be in charge of these things. Somebody's got to be running the show,
Right.
It's an easy read.
Can we talk
great.
real life situation here? Do we have a case study, anything? Because I mean, this is great in theory, but let's apply it to somebody.
So this is somebody, and this is actually on me, by the way. All right. So this is 45. Put in $61,500 a year for 5 years. So the total contribution going in is $307,500. Okay. And so what happens here is I fund this for 5 years. All right. So $60,000 and $61,500 a year for 5 years. And then I don't touch it until I'm age 60. So it cooks for 15 years. At age 60, I start pulling out $75,000 a year in tax-free income. All right. Now, I'm doing the same thing for my wife.
And this is the money that you could have been putting in your 401k.
Yeah.
And you're saying now this is tax-free.
Exactly. All right. So we fund this, and then over time it grows, right? And we start pulling $75,000 a year out in tax-free income. Now, what that means, if I live to age 94, I pulled out $2.5 million in tax-free income. But remember, Spike, I said a minute ago, there's a death benefit left over for my kids, my beneficiaries.
Wow.
So in addition to that, there's $1,650,000 in death benefit.
So wait, you put 300 in, and what was that last number you
I
said?
put 307,500 in.
Yeah.
All right. This thing performs the way it's supposed to over time. All right. There's $4.2 million in total tax-free benefits received over the life of the policy.
Now,
You can't do that anything else.
I mean,
You
if
can't.
that's
It
not
doesn't- it
worth
doesn't
picking
work
up the
that way.
phone and calling 844-944-7555.
He's gonna pay the postage.
Again, 844-944-7555 to get the book. I don't know what is.
Right.
Right. Find out if this is for you, folks.
If someone is interested, obviously, in these tax-free solutions, the book will help. What kinds of insurance should they be calling and asking you about? Because you said there's all different kinds of policies out there.
Sure. Well, I mean, the primary thing is if you are young and starting out in the world and you have young children and a young wife and a house, go get term insurance, okay? That is the cheapest insurance. You buy term based on this. I want the cheapest amount of premium going in the policy for the maximum amount of death benefit, all right? And that's the way most people think about life insurance, by the way, all right?
Yeah.
Now, the indexed universal life, which is what this is, we actually want to put the most money we can in for the lowest amount of death benefit. And the reason why, Spike, is there's cost in these things. So people say, oh, it's so expensive. And listen
I was going to say that. I wanted to ask you about that.
Yeah,
I
I'll
hear
tell you
that
right
these
now.
are
So
really expensive.
If I put in $61,500 my first year, okay, my surrender value, my cash surrender value at the end of year one is $23,000. So that people would consider that like a $40,000 cost. That's big money, and it is, all right? It takes 7 years for the surrender value to equal the amount of money I put in the policy. All right, 7 years. And the reason why that is, folks, is there's cost of insurance on the front end. Okay? The insurance company has to set this thing up, and there's cost of insurance, and there's cost to pay commissions to advisors that sell these things. These are commissionable products, by the way. And so all that stuff kind of evens out over time. And the reality is, over like a 30 or 40-year period, the average cost on these programs is about 1% a year.
Now, the book is free. The show, we've got to wrap up. You can save yourself hundreds of thousands of dollars in taxes. Tell them how to get the book.
It's so easy, folks. All you have to do is call us at 844-944-7555. My friend Mark Loffenberger did a phenomenal job in this book. It's a quick read. It's easy. It's very informative. All right, you're going to call us up. We're going to schedule a 15-minute strategy phone call with you. We're going to send you the book. After you read the book, if you want to engage further, we're going to run some illustrations for you and truly get into the dive deep into this thing and show you how it works. To get it so easy, all you have to do is call us 844-944-7555. Also, at the you can check us out at onthemoneytv.com. Again, onthemoneytv.com.
Don't forget about our radio program.
I know, we can't Radio Boy Spike's always on, baby.
Peter,
Sunday.
I want to thank you for leading this discussion today.
Thank you so much, Spike. I really appreciate that. I tried to
You tried to give to the people of Houston all of the time. Thank you so much for joining us. Hey, folks, we have offices all around the Houston area. As you know, this has been a special program about getting this book today. But thank you so much for watching On the Money. If you want your own complimentary financial flight plan, call us right here, 844-944-7555, anytime during the week or weekend. Thank you for watching On the Money. We'll be back again next week.